The Philippines achieved a strong gross domestic product (GDP) growth of 8.3% in the first quarter of 2022, exceeding a median analyst forecast of 6.6% and surpassing pre-pandemic levels. This remarkable performance made the Philippines the fastest-growing economy in the world in Q1, according to some economic observers. But what were the factors behind this impressive growth? One of the main drivers of the Philippine economy was the manufacturing sector, which grew by 9.7% in Q1, boosted by the production of food, beverages, tobacco, chemicals, and electrical equipment. The trade and transportation sectors also contributed significantly to the GDP growth, expanding by 7% and 5.9% respectively. These sectors benefited from the easing of lockdown restrictions and the gradual recovery of domestic and external demand. Another factor that supported the Philippine economy was the resilient consumer spending, which grew by 6.3% in Q1. Despite the challenges posed by the pandemic, such as unemployment, inflation, and health risks, Filipino households increased their consumption of food, clothing, housing, health, and communication services. The government also played a role in stimulating consumption by increasing its spending by 6.2% in Q1, mainly on social protection programs and infrastructure projects. The Philippine economy also benefited from a positive net primary income from the rest of the world, which grew by a whopping 81.2% in Q1. This means that the income earned by Filipinos abroad exceeded the income paid to foreigners in the Philippines. This was largely due to the rebound of remittances from overseas Filipino workers, which increased by 4.9% in Q1, as well as the improved earnings of Philippine-owned corporations abroad. The Philippine economy also showed signs of investment recovery, as gross capital formation grew by 12.2% in Q1, reversing the contraction in the previous quarters. This was driven by the growth of durable equipment, construction, and intellectual property products. The improvement in investment was also reflected in the increase of imports of goods and services by 4.2% in Q1, indicating a higher demand for capital goods and raw materials. Finally, the Philippine economy also managed to sustain its export performance, despite the global supply chain disruptions and trade tensions. Exports of goods and services grew by 0.4% in Q1, mainly due to the higher shipments of electronic products, coconut oil, fruits, and other manufactured goods. In summary, the Philippines achieved a strong GDP growth of 8.3% in Q1 2022, thanks to the robust performance of various sectors, especially manufacturing, trade, and transportation, the resilient consumer spending, the positive net primary income from abroad, the recovery of investment, and the sustained export performance. These factors made the Philippines stand out as the fastest-growing economy in the world in Q1. The Philippines has achieved an impressive feat in the first quarter of 2023. It became the world's fastest-growing economy with a 6.4% GDP growth rate. This was despite the challenges posed by high inflation and interest rates, which dampened consumer spending and business confidence. But what were the main drivers of this remarkable economic performance? According to the Philippine Statistics Authority, PSA, the sectors that contributed the most to the GDP growth were wholesale and retail trade, repair of motor vehicles and motorcycles, and financial and insurance activities. These sectors reflect the resilience and dynamism of the domestic market, as well as the increasing demand for financial services and insurance products. Another key factor that boosted the economy was the positive performance of agriculture, forestry, and fishing, as well as services sectors. These sectors are vital for providing food security, employment, and income for millions of Filipinos. They also benefited from favorable weather conditions and improved productivity. The Philippine economy has shown its strength and potential in the face of various risks and challenges. With inflation expected to ease, interest rates to stabilize, and employment to improve, the outlook for the rest of 2023 remains solid. The government is also ready to respond to any shocks and risks, such as the possible El Niño-induced dry spell. The Philippines is on track to meet its 6.0 to 7.0% growth target for the year, and to continue its high growth trajectory in the coming years. The Philippines, along with Ireland, was the fastest growing economy in the world in Q1 2022 among 29 economies that reported their GDP data. It also outperformed its ASEAN peers such as Malaysia, Indonesia, and Vietnam. But what were the factors behind this impressive performance? And what are the prospects for the rest of the year? According to the Philippine Statistics Authority, PSA, the country attained a strong gross domestic product, GDP, growth of 8.3% in the first quarter of 2022, surpassing pre-pandemic levels. This was driven by the easing of COVID-19 curbs and election-related spending that boosted domestic demand. The Philippines thus was the fastest growing economy in the East Asia region for the period, officials said. The GDP growth of 8.3% was also better than expected, as analysts had forecasted a slower expansion of 6.6%. It was also the fastest annual growth since the June quarter of 2021. On a seasonally adjusted basis, the economy grew 1.9% in January-March from the previous quarter. The Philippines' economic recovery was also remarkable considering that it had a high GDP base or level a year ago due to election-related spending in Q1 2022. With no elections this year, one would have expected a lower growth rate in Q1 2023, but the opposite happened. The main drivers of growth on the demand side were private investment or gross capital formation, which grew by 12.7% and accounted for 22% of GDP, and household consumption, which grew by 5.7% and accounted for 75% of GDP. Government spending also increased by 7.1%, while exports rose by 18.8% and imports by 20.3%. On the supply side, the services sector led the growth with a 7.4% expansion, followed by the industry sector with a 6.1% increase and the agriculture sector with a 4.9% rise. Among the subsectors, construction posted the highest growth of 11.8%, followed by manufacturing with 8.4% and trade with 7.2%. The Philippine economy is expected to sustain its growth momentum for the rest of the year, as the government targets a full-year GDP growth of about 7.1%. This is based on the projection of a 6.6 to 7.5% growth from the second quarter to the fourth quarter of 2023. The low unemployment and underemployment rates in March of 4.7% and 11.2% respectively also indicate a robust labor market that supports consumer spending. However, there are also some challenges and risks that could hamper the economic recovery. One is inflation, which has been accelerating due to rising food and fuel prices and supply-side pressures. Inflation reached 4.5% in April, above the central bank's target range of 2 to 4%. This could dampen consumer sentiment and erode purchasing power. Another challenge is fiscal prudence and revenue generation, which are needed to finance infrastructure projects and human capital development that are essential for long-term growth. The government has been pursuing tax reforms to broaden the tax base and improve collection efficiency, but it also needs to balance its spending and borrowing to avoid fiscal imbalances. A third challenge is external uncertainty, especially amid the COVID-19 pandemic that continues to affect many countries around the world. The Philippines depends on trade, remittances, tourism, and foreign direct investments as sources of income and growth, but these could be disrupted by global shocks and geopolitical tensions. Therefore, while celebrating its remarkable economic performance in Q1 2023, the Philippines should also be vigilant and proactive in addressing these challenges and risks to ensure a sustained and inclusive recovery.